Hey YouTube, it's Zach. Bank of Canada just increased their policy rate by 50 basis points. I was shocked. I was anticipating a 25 basis points or maybe even nothing for December because historically speaking, Bank of Canada does not increase rates on December, just so that they don't shit on everybody's mood right before the holiday season. But TIFF being TIFF surprised everybody with a 50 basis point increase. Surprise, surprise, ho ho ho. I made my predictions for the December 7th rate hike based on a report that Bank of Canada themselves posted on their website showing the number of mortgages that will hit their trigger rate when they make these rate hikes. The fact that they published that report already tells me that they were going to increase the rates and go through with this because nobody checks their parachute if they're not planning to jump. However, this last move by TIFF going the full 50 basis points, according to their report, puts 65% of variable rate fixed payment mortgages at risk of hitting their trigger rate. I made a video going over that report and checking the options that Canadians will have when their bank calls. I'll put a link to that at the end for you guys to watch. Since I posted that video, my subscribers grew by 345%. I'm speechless. Thank you so much for every single one of you who subscribed. I appreciate it. Canada has 5 major banks and they all released their quarterly reports December 1st. So I wanted to go and check their balance sheets, see how much money they loaned us, and if I should get ready to liquidate all my positions at these banks. Going over the reports, RBC is holding $352 billion in mortgages. CIBC is holding $262 billion in mortgages. BMO has about $139 billion. TD has $244 billion and Scotiabank has $302 billion. These are all Canadian mortgages secured by Canadian real estate. A few interesting things stood out for me. The first one is Ontario has the highest mortgage amount by a mile with all 5 banks. Talk about over leveraged. I'm not sure if this is a good thing or a bad thing, but it kind of explains the erratic driving on the 401. I also noticed that on average, most of the banks have about 30 to 40% of their mortgages issued in variable rates. Again, maybe this is a good thing or a bad thing, but if you own banks, it might be good. Banks are saying they're basically lending to people with good credit, and the loan to value ratios are also pretty good, meaning most of us own more equity in our homes than debt, and we're most likely not going to be walking away from them. Now, mortgages are all good, but a very important thing to check is delinquency rate. Are we paying our mortgages or do we just have them? Checking the reports from the 5 major banks, they're not actually too concerned about people defaulting on their payments. And checking the CMHC report, it looks like delinquency rates have even gone down. We are sitting at 0.14%, which is pretty good. When you look at Ontario, it's actually at 0.07, which is even better. If we compare that to Q3 2020, let's say, or Q3 2019, that number was sitting at 0.29%. That is impressive. It seems like Canadians, we have a lot of money. Although we're complaining about Loblaws and eggs prices going up, we're still keeping our Disney Plus subscriptions. That being said, I won't be selling my positions at these big banks because they're finally making money thanks to these rate hikes and Big Daddy Tiff pulling one of the best bait and switch of all times.
Interest rates are very low and they're going to be there for a long time.
He gave an amazing speech at the Business Council of British Columbia. I'm so proud of him. He did 2 things. One, he confirmed that this inflation is due to the shutdowns and Russia. It's nothing to do with printing money. You guys were wrong. He also apologized for misleading Canadians with this whole bait and switch. Obviously, he didn't apologize during the event. He actually texted me directly before the event to let you guys know that he's very sorry that you guys are upset. During his speech, he said he's 100% committed to bringing the inflation down to 2%, even if that means he'll be screwing Canadians over.
I'm not hearing from Canadians that they're okay with high inflation.
At this point, I'm thinking he's talking about a girl maybe named Canadians. Like miking Canadians walked into a grocery store and Canadians was upset about eggs prices. I don't know. The next rate announcement is going to happen January 25th, and we will have finally some data to look before we make that decision. TIFF had to make up the numbers this time. For the January rate announcement, we will have one, data from Stats Canada on the inflation numbers for November. That is coming out December 21st. And number two, let's be honest here, Big Daddy Tiff is not so big. This whole inflation numbers, delinquency rates, unemployment, none of it really matters. What really matters is what the Federal Reserve is going to do in the US. And all Big Daddy Tiff can do is copy Papa Powell's answers to the test, because if we do not increase the rates according to what the Federal Reserve does, we'll be importing their inflation and we'll be failing the test. And lucky for us, we would have that data on December the 17th, so that on January 25, TIFF can look at that number and say, this is how much we're going to raise it by. I'm planning to make a video covering the US rate hikes and how it's affecting their real estate market, because we have two different markets and they're structured slightly differently. So if you want to watch that video, make sure you subscribe so you don't miss out on it. If you don't subscribe, there's a big chance YouTube will never show you my face again. The video that I was talking about, breaking down the mortgages and the options Canadians have when their banks call as their mortgages get triggered, is right here. So if you want to watch it, click there. I think you're going to like it. And for the rest of you, thank you so much for watching. See you in the next one. Bye.